Aneel Waraich, Executive Vice President and Director of Steppe Gold. Steppe Gold is a gold and silver producer, producing from their phase one operation, doubling our production profile over the next 2 years while continuing to explore and grow our asset base in Mongolia.
How are you?
I'm good, thank you.
Welcome to London.
Thank you.
I apologise for the weather.
As expected.
As expected, as advertised, yeah, for sure. So you're Minds and Money, meeting investors, busy?
Busy. Yeah, this is a lot busier than last year's, I would say. And so you're feeling a little bit more energized.
Yeah.
I think there's 4,000 people here today, so it seems better.
Good. No, it's good. I wanted to catch up with you guys because I think last time we spoke, you made a bunch of promises to me about how things would kind of advance and move ahead. I'm particularly interested in balance sheet because you're producing gold and silver now, right?
Yep.
How's the balance sheet?
Good. I could say we started this year with debt on the balance sheet plus a lot of payables that we accrued when we weren't in production last year. To avoid equity dilution, which we did successfully. Yeah. So this year, we produced probably already 30,000 ounces this year at about $800 an ounce since March till now, till the end of November, we'll call it. So that's obviously a lot of cash flow to pay back some of those payables, knock them down, to actually pay back some of the debt we used to acquire and install our phase 2 crusher.
Yeah.
So we drew down on some debt and we used operating cash flow to pay that down. So we're continuing to use our cash flow to strengthen our balance sheet, going to the new year, hopefully with no debt or very minimal.
Okay.
To allow us to expand into the phase 2.
That's what I was trying to get to understand when all that kind of gets paid off.
Yeah.
Fresh start and a run at next year, 2023. So phase 2 will be delivered by when?
About 2 years from now.
Right, okay.
Yeah.
And what does that give you? Where does that move you from and to?
Yeah, so it moves us from about 50,000 ounces at about $800 all in cost to about 105,000 ounces at similar costs.
Wow.
Yeah, so maybe 800, 850. So it's a big jump in cash flow, as you can imagine, and it's meaningful mine life. It's over 10 and a half years today for phase 2, and still growing.
A lot of the companies come on here, they get value. People take the value early, right? Mm-hmm. They're looking at these things and going, it will probably be great one day. You're not getting any joy in that front, are you?
No.
I think, what do you think people are waiting for? For the cash to actually come rolling in, for the debt to be paid off, payables to be paid off?
It's a mixed bag, to be honest. I can't give you the exact answer. I mean, all I can tell you is 2.5 years ago, when we didn't have 10.5 years of mine life that's permitted and expanding, solidified over 100,000 ounces, we were only at a 3 to 4 year mine life oxide mine at this run rate. And we were at 220 million market cap. Today we're at sub 80. Yeah. So we've executed the last year. So maybe there's an overhang on the project financing side. People want to see that can be delivered. Yeah. So there's no imminent or massive equity dilution. And that's what we're trying to avoid. So maybe that's one piece. Now we have been producing for 9 months without any stoppage. So I can't say people are waiting too much longer to see continued production, but we're going into the winter. There is lower recovery, lower production as expected. Maybe you want to see that. Maybe you want to see the balance sheet a bit stronger. Exploration results. It's a mixed bag because I see guys put out exploration results. Yeah. Nothing happens. Producers who generate cash flow like us, nothing happens. But then those producers who generate a nice drill hole, then they get some love. So maybe that's what we need.
Well, I know, but 2020 was nuts. I think everything was super overvalued at that point. Yeah. So, but even now, we're having de-risked as much as you have, getting into production, which is no mean feat. Not too many people can claim that. Lots of people talk about it. Not many people deliver it.
That's right.
And we're talking about 105,000 ounce a year production within 2 years. Those are some nice moments to be looking forward to. So what are you get the Mongolia factor. We talk about it every single time. But the more Mongolian companies come on here, the more we realize that it's pretty good place to do business.
Absolutely. I mean, you have a supportive government, as we saw last year when we put that feasibility study out. Yeah. They gave us the capital when we couldn't get anywhere else or didn't have any production at the time. And we were able to move phase 2 forward. Supportive government. There's no violence or terrorism. Yeah. The government's actually been paying us on spot pricing for all our gold sales in the country, and since May of this year, a premium, 5% premium. So it's all the right things. Rio Tinto doubling down, Zijin making their first public. So things are moving forward. Mongolia knows how critical the mining industry is, and players like us who are growing and creating local jobs and all that stuff. So arguably one of the better jurisdictions out there. If you've seen a lot of ups and downs in the Americas and elsewhere. So,
So and what we've seen well, certainly, again, with something we've talked about, but I think it's worth kind of going over, is the ability to actually get your consumables, whether they be your reagents or whatever, because they've got to come from outside country,
That's right?
And I know you've got multiple routes to market for that. Experiencing any issues now? Because you moved from this kind of just-in-time to this kind of inventory-based system?
So we solved that just-in-time issue where we're dependent on only one supplier, one country, being China. So that land border with China still remains closed today for hazardous materials. We procured our phase 2 crusher last year and installed it from that same border, but hazardous materials are still not crossing that border. So we've solved it by sending the same supply from China up to other countries, Korea included, Russia included, and we've received multiple shipments this year. And I can comfortably say today we're probably about 6 months of inventory on site. So we don't receive our next shipment for 4 months. We're still not stopping production. And so it gives us a lot of breathing room now. And we said we would do that. We said we'd do it by summer, but that's just the reality we live in. It took longer. And so as the kind of balance sheet gets tidied up, you'll be creating a fair bit of free cash flow, one would imagine. Is your attitude, given what you come from, head down, let's just do our thing here, or are you starting to have a look around elsewhere where people haven't perhaps been able to deliver what you've delivered, like a producer? No, absolutely. I mean, that's natural. One is, the cash is going to build up quickly because a lot of our inventory has been paid for in terms of mining, blasting, and sitting there ready to be processed. So we have 70,000+ ounces ahead of us. So if we never blasted or mined again, at least for 18 months, we can continue to produce and generate cash flow. A lot of that has been paid for. So you're going to see the cash build up even more. You allocate costs, they're all in costs, going to be similar, but from a cash flow perspective, it's only going to get stronger for the next 18 months. So we're going to plow through that, try to get as much cash as we can out of this business to strengthen our balance sheet, to allow to use that cash to self-fund the equity component of the phase 2 expansion. And so you always have to look at other things, but for us, there's a lot of opportunity in country first. We're not looking outside Mongolia at the moment. There's, this is a relatively still underexplored country. There's a lot of opportunity in country. So what we want to do is continue to consolidate, we think, in country, become the platform. So in a couple of years, as we get bigger and bigger and have executed phase 2, maybe we have a phase 3 with our UK license, getting closer to production. We built a production profile that has scale, has meaningful mine life, which we've already demonstrated in phase 2, and then maybe it makes sense. But there's enough opportunity in country, I would say, that we don't need to look elsewhere at the moment.
Well, that's kind of interesting because I was wondering how much the Mongolian factor had played in your perception of what the market thinks about you. So therefore, would you de-risk and go to another jurisdiction? I can understand why Mongolia is fairly untapped, right? There's not a lot of players there. And maybe that's part of the issue. People just don't quite kind of get it yet. So where would you liken Mongolia to? Because I think there's the kind of anti-China rhetoric which goes around a lot, and obviously Russia's going through its issues at the moment. So, what would you say it's like in terms of working? Well,
one is it's misunderstood. We spent years educating people about Mongolia because you get a lot of responses from institutional investors, know Mongolia, and then I asked the question, why? And a lot of them didn't know. They read the Financial Times and they saw some skirmish between Oyu Tolgoi and Rio Tinto. That was an asset company specific issue, not a country issue. It's education, and we're showing that through execution. Like, it's really hard to not look at the facts. And we built a mine with the government support, have created those jobs, and profitably. So no one's held us back. In fact, the government never held back Oyu Tolgoi during this 10 years of noise. That's always progressed. There was never a blockade or anything of that sort in country, which happens in many other countries, by the way, when there's a unresolved issue with the government and a major or super major like Rio. So for us, it's all about education. Yes, people look at we have two superpowers, Russia and China. We're landlocked, and when they're saying, "Well, you're stuck. Are they going to invade you? Is that your only options for partnership?" No. In fact, the Koreans, Japanese, Germans, Indians, US are all in Mongolia in one way or another, whether they're building out infrastructure, looking for other mining opportunities. So Japan, Korea as well, right? I think we're in a strategic opportunity here, having executed multiple times in Mongolia, right? And now people are looking for more opportunities, and they'll work through us.
Well, strategic opportunity is one thing. That's for you as a operating business. I'm looking for investment opportunity. You've got Uncle Eric aboard, haven't you? he's quite good at spotting opportunities.
Yes.
And I understand he's invested a little bit more money recently on top as well.
He has.
Yeah.
So, he was our last equity investor in August 2020. We raised $50 million just with him. Very strategically, it was great for the stock and great for him to come into Mongolia finally. Hasn't sold a share, and I would say I think he's about, in the last few months, he's bought 600,000 shares on market. So he's not buying many shares of any company on market. It's just a massive endorsement. So, he's close to 11% of our company. I think he sees the value. We've done everything. We're aligned with our investors of not diluting unnecessarily. We own the company just like he does. And so it's a great endorsement and a marketing tool, I guess, because people see it and they see that he's not backing too many other companies on the market like that.
Yeah, well, there's a few people kind of follow him, whatever he invests in, they do tend to follow. So for you, 2023, gold's doing its thing at the moment, and obviously we've seen a little bump, whatever, it's 1750 at the moment, ish. Whether we return to the levels we saw of nearly $2,000 or not, are you happy at these levels?
Yeah, actually,
do you need the price to move significantly to?
No, I think the market does. The equity markets do.
It feels that way. Yeah.
That's the sentiment that you will drive people into the market, but we don't as a producer.
Yeah.
We make a very healthy margin. $800 plus at this price, and our phase 2 will be very similar margin. So we don't need that. And going back to your point about valuation, people stuck on maybe it's just Mongolia only, should you look elsewhere? Well, in a couple of years when we're generating that kind of cash flow, what can you do? You can buy back shares, pay a dividend. There's a lot of ways to create a liquidity event or close that valuation gap without relying on a sale or buying some other asset elsewhere. So what gets us excited is in a couple of years we'll have a lot more cash to keep growing or create some
optionality. You got optionality,
exactly.
right? I think this is the thing that investors need to kind of look at more closely when they're talking about companies is the margins, right? Because we've seen, and I say this a lot, there've been a lot of cost increases, inflationary pressures coming from below. The kind of price squeeze as gold has come off, or got down to it's low 1600s. It was kind of, it's still good, but for marginal projects, not so much. If you're producing costs are something similar to it, below $1,000, you kind of don't mind so much. These moments they'll still make money, right? So it's fine. But obviously a high gold price also good news. But it kind of means that there's kind of potentially less choice. I kind of like these moments because the kind of marginal projects or the suboptimal projects get squeezed out of the market. So no bad thing. You don't feel you're one of those, so you don't really mind these prices, do you?
Not at all. Not at all. That's the beauty. I mean, and most producers should be looking that way, that they should be able to make money at $1,500, $1,400, $1,200, not relying on a higher gold price at some point in the future where you'll see they're $2,000 and they're worth this much. But what are they worth at yesterday's price? In the 1600s, right? Not 1700s. So, we look at that all the time. So we have a nice, healthy cushion that we don't need to rely on a higher gold price to build a very strong cash flowing business. Of course, from an equity perspective, it's nice to see a higher share price, and the sentiment would move if gold price moves, I think, and that's where we'll get the love. And if not, we have other ways, optionality, like we discussed.
Absolutely, and I would encourage people to look at companies that can actually make money. Right? It's a bit old-fashioned, I call it, because people seem to have forgotten running a business that is about making money, whatever the nature of that business is, and gold companies which need a super high gold price, which we're nowhere near, or would need a significant change in the market to affect. That's a hope and a prayer type territory, not good investment. Well, look, Aneel, good to see you.
You too.
Glad you made it all the way over here.
Thank you.
Looking forward to seeing what 2023 delivers for you. Sounds like you got it under control.
Hope so. Thank you.
Okay, cool.